Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
Yeah, the narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another tough
Hello.
Hi, 𝗬𝗍𝗿. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends. Oof. We get the most insane bullish news on CPI data, right? Everything coming in lower than expected, and Bitcoin takes a dump here to the downside. What on earth is going on, right? Bitcoin is supposed to be pumping. But we got the short, right? The short that we've been speaking about for the last couple of days, claiming the liquidity above this high. We got the short. We got the momentum to the downside, but now it looks like it wants to go and recover and claim the high again. The one thing I have to highlight over here, legends, remember to smash up that like button on your way in, because I'm just diving in straight, I'm getting straight to the technical analysis, okay? The one thing that I am not a bit concerned about, but what is strange is that in order to get a deeper correction to the downside, it's very weird to have a three-wave structure over here. Okay, when you have a three-wave structure over here, it is screaming to come and take the high again. It's like, come grab me, take me, right? It's very strange because you want to see a five-wave structure to the upside, and then you can have a deeper correction to the downside that could even potentially come and claim the low, because that's a C wave. It's an ending structure. For a B wave or an X wave to be an ending structure over here, right, is very weird, right? It's very, very weird. So legends, I mean, we could be getting the recovery over here. So from a longing opportunity, I mean, let's keep it simple, right? Swing failure from the low, swing failure from the lows. This one was the one to get into, because that is the one where you could have managed your risk like a sniper, right? I just want to see if I take a fib from this low to the high. Just take the scribble out there. I mean, you got acceptance back inside of the golden pocket. You swept the liquidity ever so gently below these lows over here, right? If you use this golden pocket line as an SFP line, but more importantly, if you use that as an SFP line, oh, what good risk management. And now we're getting some momentum here to the upside. Right, legends, this structure can like to be a little bit confusing from an Elliott Wave perspective. It looks very corrective to the upside. It does not look impulsive. Okay, someone asked, I think it's 𝗬𝗍𝗿 asked, well, can we get upwards momentum without a five-wave structure? Yes, you can get upwards momentum without a five-wave structure, but the probabilities are extremely high to take the low again. Okay, if you have a three-wave structure, okay, to the upside, and you move down, the probabilities are extremely high to go and take that high again. Okay, But also, if you have a three-wave structure to the downside, the same thing. But for an impulse, okay, let me put it this way, because I might be confusing some people over here, right? If you have a bottom and you want momentum back to the upside to continue the bull market and go and claim the $110,000 zone, you cannot do it in a three-wave structure to the upside. You have to have 5 waves. You have to have a 3-wave corrective structure, and then you have to see continuation to the upside, right? The only way in which you can get upwards momentum without a 5-wave structure, there's only one way. Only one way. And it's this little bad boy over here. Okay, where you form a 1, 2, 3, 4, 5, and all of the waves are 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and then a bigger 1, 2, 3, 1, 2, 3. Okay, so you have a 5-wave contracting diagonal, of which all of the waves must be 3-wave structures. You then have a corrective structure that corrects the entire impulse, that creates a higher low. Then you can continue to the upside in an impulsive structure. This is the only structure that can send you higher with 3-wave structures. Okay, and when we formed the structure, this is exactly what we said, right? When we formed this little structure, this little bad boy here to the upside, do you guys remember? I'm not sure if I deleted that scenario. When we formed this 3-wave structure, A, B, C to the upside, I said, and a lot of people said, shit, where's 4 and where's 5? Because now that you have a 3-wave structure to the upside, all of the structures has to be 3-wave structures. You have to have a 3-wave structure down, another 3-wave structure up, 3-wave structure down, 3-wave structure up to form that contracting diagonal. Okay, then you get the correction, you scare the crap out of everyone, the bear market is back, then you continue to the upside. And we failed, okay? And because we have a 3-wave structure, the probabilities are always much higher that you're going to come and claim the low, because you're failing to build impulses. Okay, right, legends. That and like I mentioned, I'm not sure, I think I mentioned that yesterday. The probability for that scenario was like 5%. Okay, it had such a low probability. I want to see if I still have that scenario on here. I think I deleted it. Large W. The only Elliott, this was it, right? Do you guys remember me talking about this? ABC, ABC, A, B. You wanted a C wave here to the upside. This is where the structure failed. It failed, yeah. This is where it failed. It was supposed to move up here in a 3-wave or a C-wave structure, and it failed. And this contracting diagonal to the upside got invalidated. Okay, this scenario carried a 5% probability. That's how low it was. But the bulls were hoping, like, okay, maybe this is the low. Maybe this is a low, and the only hopium that we had for a continuation here to the upside was this little contracting diagonal. This was the only bullish structure that we had without taking the low. It got invalidated over here, and we took the low again. Right. Now, this monstrosity, legends, I think what is most important is what is going on inside of this structure over here. Remember to smash up that like button. Let me say hi to the beautiful community before I continue the technical analysis over here. And I don't think I'm going to delete the scenario. I'm going to leave it here as an example. Okay, cool. Legends, let me say, Talma, hello, welcome to the live stream. No, we are not going to the moon. We are going to Mars. All right. Some people are still bullish over here, right? Some people are still bullish. What is the most important thing, 𝗖𝗍cie and the rest of the community over here? The most important thing that you can do as a technical analyst when you make a low, you have to count one of three things. You have to. Otherwise, you're not going to turn around. Okay? The three things is, or can like to be, okay, let me draw these little lines in here to make it all so pretty. Make them nice and thick. Let's make that one nice and thick. Okay. The three things is, you need to see an impulsive structure. 1, 2, 3, 4, 5. Clear 5-wave impulsive structure. So like this one, 1, 2, 3, and you needed another 5. If there was another 5 over here, there was a high probability to make a 3-wave corrective structure and continue momentum to the upside to build an impulsive structure that takes you back to all-time highs. You have to see an impulse. When you make a low, like we have now over here, when you make a low, you have to count a 5-wave impulsive structure. They are very easy to count, and you can clearly see the 5 waves inside of them. If you cannot count a 5-wave impulsive structure, you have to be able to count a contracting diagonal. Okay, a 1, 2, 3, 4, 5 contracting. Contracting means it's not a parallel channel, it's contracting, it's squeezing together at the end, okay? The waves are becoming smaller inside of it. If it's a parallel channel, no bueno, okay? It's not going to work, right? It cannot be a parallel channel. It can be expanding, which is rare. Never considered unless all other scenarios fail. You get an expanding triangle as well. But the most important one I want to show you guys is it's either an impulse or it's a contracting move. These moves can either have the 3-wave structures that I've just explained, or it can have 1, 2, 3, 4, 5. ABC, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, and then you get a 3-wave corrective structure and you continue. If you cannot count a contracting move or an expanding move, there's a high chance that the low is not in. Even with momentum and zigzag and left, right, and center, like we're doing over here, there's a high chance you're going to come and claim the low again. Right. If you cannot count an impulse, and if you cannot count this little contracting structure, there's a high chance that you are correcting to the upside. And you're going to start at some point building impulses back to the downside, and you're going to smash that low. I hope that makes sense, legends. That is the most important thing that you can teach yourself as a technical trader. Go onto anyone's Elliott Wave Theory course, go onto an Elliott Wave Theory website and go and study this move and an impulsive move. Go and study this move and this move. Once you make a low and you can count one of these two moves, then it's game on. If you cannot clearly count these moves and you are struggling to count it, it's most likely a corrective structure. Okay, when structures looks wonky, it doesn't make sense, you have to force the counts, it's most likely a corrective structure. Okay, because impulsive structures are the easiest structures to count. Right. I hope I've driven my point across over here, over there, right, legends? But we're going to go and analyze this structure here in a moment, okay? Let me continue with the comments. Lawrence, hi, Dewald, welcome to the live stream. Okay, got it. Jack, hi, Dewald, I'm so lost in the wave structure. Yes, this little monstrosity here to the downside, okay, is not easy to count from an Elliott Wave perspective. What I would like to do now in front of you is to say that, well, can we count an impulsive structure and can we count a contracting diagonal? If we cannot see these two clearly forming inside of here, it's most likely a corrective structure and we're going to come and take the low again. Okay. That is the most important point. And this is why this low was so important when we started getting upwards momentum. Okay, this move got everyone excited. Okay, this looks good, right? You have 1, 2, 3, 4, 5. Yes, we have a small little 5-wave structure. Okay, and then we made a 3-wave corrective structure. And we're like, okay, we're getting there. And then we had one leg to the upside and we fell down. Okay, so now this becomes 1, 2, 3, where's 5? You need 4 and 5. There was no 5. This is a clear 3-wave structure. And we were like, okay, well, the probabilities are higher to take the low unless we built a contracting move to the upside, which was so early to call. You usually only speak about a contracting move once wave 4 is in over here. 1, 2, 3, 4. When the fourth wave is in, the contracting move to the upside in a 3-wave structure starts carrying higher probabilities. Okay, so we're going to go and analyze that situation there at the bottom. Right, cool, legends. Let me clean up the chart, go through some more comments, and then we will continue. Smash the like, legends. Hi, Grace, welcome to the live stream. Is this one impulsive? We're going to go and figure that out in a moment. I am bearish bull. Yes, I'm also a bull bear in the same day, right, legends? But there's something very important. Once we've done the technical analysis over here, and we've, you know, as best as we could, can analyze the structure from an Elliott Wave perspective, it's actually way simpler than that, legends. It's way simpler. When a structure looks confusing, you don't know how to count it from an Elliott Wave perspective, I mean, just do support and resistance. Have your Fibonacci levels ready. Look at your VRVP to show you where the most amount of volume is, okay? There you have your VRVP that shows your volumes. You do not need to know anything about Elliott Wave theory to be a successful trader. I did not know Elliott Wave theory when I started trading. Okay, it's something, it's a skill that I started learning later on because it was so damn interesting to me. But you don't need Elliott Wave theory to trade. Okay, for example, if I zoom into this little structure, okay, this is the shorting zone that we spoke about yesterday. 50% Fibonacci, okay? If we tap the 50% Fibonacci and we swing failure from the high, that's a trading strategy. It's not Elliott Wave theory related. It's a trading strategy. You break above, you fail to break higher, you get acceptance back below, that's a short. And you take short profits when you hit support to the downside. That's all you do. Now you look for resistance to the upside to look for another shorting level. Here was your longing level to the downside. Okay, I know that's very small. I need to zoom in there, legends. Let me switch off the VRVP. Okay, let me zoom into this tiny little structure over here so that everyone can see clearly. Okay, right, let's go to the 15-minute time frame. Let's just make some more information available, make it nice and big. Okay, now that we have this picture here on the chart, right, yesterday, who was in class? Okay, without using Elliott Wave theory, we said we like this pivot. When you look at liquidity heat map, can you guys see? We knew that there was massive liquidity building up above that high. Okay, it was the 50% Fibonacci that was running along here as well. And we said, if you get price tapping that level and it struggles, that is where you short, that is where you put your stop loss. Price moves in your favor. How often do I say this? Okay, you protect your cash because the market is here to take it. Your job as a trader is to protect your goddamn cash. That's your job. Protect, 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 protect. Your job as a trader should not be to see how much money you can make. Your job as a trader should be how can you protect your cash. Your job is to protect your cash. Okay, then you identify support and resistance areas. Okay, that is a, wait, let me just grab my pen. This was your first area of support. TP1, TP2, right? I would have most likely closed my position there. I would have maybe leave 5% open for lower levels, okay, depending on your trading strategy. TP1, TP2, when you hit support after a short, you take profits. You get in, you get out. Now you wait for the next trading setup. That is how you scratch money from the market. Okay, it's not about trying to catch the bottom so that we can go to all-time high. It's not about catching the top at all-time high so that you can ride all the momentum back into the downside. It's nearly impossible to do that. I remember, legends, and this is something I think I actually want to talk about it tomorrow, but I'll touch on it today again. Okay, I remember expect the unexpected. No one thought that this was the end. And when we got the dump to the downside in the previous bull market and we started moving up here, everyone was calling for $100,000 Bitcoin. Do you guys remember? No one in their wildest dreams thought we're going to top out over here. Okay? Everyone was calling for $100,000, and I still remember Mr. Plan B. Okay? Everyone was just Mr. Plan B, the stock to flow model. Can you guys remember that? Okay? No one expected the price to turn around over here. Okay? Maybe there was a couple of people that managed to open up some shorts based on technical analysis, and they left some of the position open and they were like, okay, I'm just going to ride it all the way to the downside, right? But I don't think, you can't say never, but there was very, very few people that called this top and shorted it successfully all the way to the downside. When we were here, everyone called for 100K. When we were here, everyone called for $10,000. And the only point that I'm trying to make over here is, now that we are here, everyone is saying this is the top. Do you want to tell me, for the first time in history, everyone has successfully predicted the top of Bitcoin? I don't think so. Right. Do you think they're going to successfully predict the bottom of Bitcoin? I don't think so. Okay, so it's never the trade, legends. It's never the trade, okay? I think what I'm trying to teach you guys here on the channel is that you short resistance, you take profits by support, you long support, you take profits by resistance. You get in, you get out, you look for the next trading opportunity. Okay, yes, you could sometimes get lucky if your trading strategy says, okay, at TP1 I take 60% profits, at TP2 I take 30% profits, and I always leave 10% of my position open for higher or lower levels depending if you're shorting or longing. Okay, a day trade can turn into a swing trade. So if you were a lucky person that caught the top in a short over here, and when you start hitting support, okay, TP1, okay, so you took 60% of the profits. Price consolidates, and you know, okay, right, here is a TP2. Okay, price falls, you take TP2, and you are now 90% out of the market. You've taken majority of your profits from your swing trade here to the downside, but you can see how it turns into a swing trade. And now maybe you have 10% of your position open to say that, well, if we do fall, I'm still part of that move to the downside. If I get stopped out, I have taken 90% of my profits. Right, cool, legends. Now, I want to go back here onto the 15-minute time frame, and this is now what we need to do. We need to now identify from a trading perspective, this was the short. And if you entered this short thinking that price is going to do this, you might now get a nasty surprise because price could stop you out and now you did not take profits. Okay, so I hope what I'm trying to instill over years, you know, for some the penny have already dropped long time ago and they actually like, oh, Dewald, here you go again. But for others, for most, the penny has still not dropped. Okay, because I still know that there are many people shorting. They nail the entry. They put their stop loss where they're supposed to put their stop loss, but they think it's the trade that's going to come and claim the bottom, and it doesn't. And they enter another epic long, and they enter another epic short, and you know, they just fail to take profits where they're supposed to take profits, thinking that every time it is the low or the high that they've caught, and it's just going to rock and roll to the upside. Okay. Or to the downside. Right, legends. God bless you, Dewald Sokman. 𝗞𝗔𝗍𝗿. You, what a username. Do you think it is true that only less than 5% of day traders are profitable? According to ChatGPT and Google, that is a true fact. Okay, and in actual fact, that number might even be less than 5%. I think it's more like 3%. Okay, and Yeah, it's not a high stat, right? And I think that's why a lot of people are still struggling with day trading, and and I know that there's a lot of people that don't believe that it's possible, because if there's only 5% or 3% of people that are actually profitable, the majority is in actual fact in the camp of it's not possible. It's a gamble. You will always lose. And they will break each, you know, if you inside the echo chamber. Okay, I've tried, doesn't work, keep on losing money, I'm gonna give up, right? And it's not that only 5% of day traders are actually profitable. I want to rephrase that sentence and says, out of 100 people that try to be day traders, only 5 succeed and continue. The other 95 don't still continue. They've given up. They've gone back to 9 to 5s. Maybe they've started up their own businesses again. Maybe they're doing garden services, working at McDonald's. You're right. But, you know, not everyone is meant to be a day trader. It takes a specialized skill. And that skill is not technical analysis. That skill is not technical analysis. It's about risk management, and it's about your psychology, from a risk and a greed and fear perspective. Okay, can you enter every single trade? Can you enter every single trade, regardless of how bullish and how bearish it looks? Ask yourself this question and be honest with yourself. You don't have to post a comment. Can you enter every single trade with 1% of your capital? You never go over and you never go under. And you always make sure that you get stopped out before you get liquidated. Have you in the last month entered every single trade with the same amount of capital, which is 1% of your portfolio? Right? You need to answer yourself. You need to ask yourself that question. Chances are that the majority will say, no, I haven't. I've done some trades with 1%, especially if I've taken a loss, then I start taking it easy again. But when I win 2 or 3 trades, maybe the 1% turns into 2%. Maybe the 2% turns into 20%. Okay, because now the confidence starts, you know, do you see how the psychology starts stuffing you over? Okay, maybe the 20% turns into 50%. You get one trade wrong, bam, your account is out. Okay, so if you can answer that question with a level of certainty and truth, you don't have to answer me, okay? You need to answer yourself. You need to be truthful to yourself. Have you been trading consistently with the same amount of capital with every single trade, regardless of how bearish it looks or how bullish it looks? Have you been taking profits at support and resistances where you are supposed to be taking profits? Okay, and then another important question, okay, if you have your trade planned, you know where to take profits. Okay, wait. Let me try this again. If you have a trade, do you know where to put your stop loss? Do you know where to enter, or why? Do you know why you're entering? Do you know where to put your stop loss? And do you know TP1, TP2, TP3? Okay, where to take profits? Have you been able to successfully tick all 3 W's with every single trade that you've taken? Have you successfully entered every trade only with 1% of your capital? Not more, not less. Maybe less is fine, okay, but not more than 1% of your capital. Has your stop loss always been above your liquidation price, so you get stopped out and not liquidated in your position? Do you guys see that trading becomes a full-time job? It's a full-time job. It is an extremely disciplined job. Okay, everyone that starts out, that 95% of people that start out, or that 100% of people that start out, they only focus on this. They only focus on this. How much money can I make in the trade that I'm going to enter now, tomorrow, today? The 10 trades that I've entered today, they focus so much on the monetary benefit of the trade that they do not focus on the why, and they do not focus on the risk management, and they do risk management. Risk management, risk management. Why is the technical analysis? They only focus on this. And this is why there is so many people in crypto, because they are still only focusing on this. How much money can I make? Okay, not can I get a successful trade. Right. Okay, legends, I hope the education is beneficial to at least one person in this live stream. Okay. And I hope that's also answered your question. Who asked that question, Mr. I feel attacked. Why do you feel attacked, John? Right. I was not talking to you. I was just sharing my passionate education over here. Right. I'm good, Mr. Goldstar in the house. Right. Dewald, if you have a $100 account and have to use 5 to 10% to make money. Dewald, if you have $100, I see someone disliked my live stream. Someone is obviously very pissed off about what I just said over here, right? Then you must dislike the live stream. You must leave. You must unsubscribe. Okay. If you are only focusing on the monetary benefit from a trading perspective, you will never make it. And the reason you have left and disliked the video over here is because you are still not making it, right? So it is what it is at the end of the day. And this is why I started the channel, to teach people to be successful, what it takes to be successful. Right. Happened to me, got liquidated like 3 times. Oh, sorry, wait, I'm jumping ahead. Dewald, if you have $100 account and have to use 5 to 10% to make money, no. Well, the easiest way to explain it, okay, guys, and I'm going to get into the structure now, right? Remember to smash up the like button for the education over here. If you have $100 account, let's write it. If you have $100 account, okay, you have to stick to the 1% rule. And there's 2 ways to do it, but I'm trying to explain it in the simplest way that makes possible. So you can only trade with $1. And now you're going to say, but how can I make money? How am I going to become successful if I can only trade with $1? You can still trade this $1, okay, with 100. Let me just delete that. You can still trade the $1 with 100x leverage, which means that you are still trading with 100% of your portfolio at 1x leverage. Okay, this is the most important part, is this little tool over here. This is the most important part. As long as your stop loss, okay, is less than 1% away, so let's put it there on 0.9% away, and you have a 3 risk to reward trade over here, right over there, okay, this is the trade that you're planning to enter. You can see that your stop loss there is 0.9% away. If you trade with $1 at 100x leverage, which basically means you're trading with 100% of your portfolio, okay, and you get stopped out, you only lose 90 cents. Okay? Or another way to look at it, the stop loss determines the leverage that you can use. Okay. So and this is why I always say, when someone posts a P&L screenshot and they put 100x and there's 100 and they did a trade with 100x leverage, everyone gets excited and says, how on earth did you do that? How on earth did you trade with 100x? You little degen. Okay, but you don't know how much capital they deployed in that 100x position. Okay, you don't know. Right? So it is the stop loss that determines how much leverage you can use. If your stop loss is less than 0.5% away, so let's say it's 0.4% away, it means you can now trade with a 200x position, which means you're now trading with $200. Okay? And if you get stopped out, you still only lose less than 1% of your capital. I hope what I'm trying to explain makes sense. Another way to look at it, okay, because some people don't understand it when I explain it this way. Another way to look at it is to say that if your stop loss is 1% away, you can trade with your entire portfolio at 1x leverage. If you then get stopped out with a 1% stop loss, you will only lose $1. Okay. If you trade with your entire portfolio at 100x leverage, that's where the wheels fall off. That's where you get liquidated. That's where you say, goodbye account, no more trading for me. Okay, right, cool legends. Let me move on over here. Okay, let me move on. Cool legends, remember to smash up that like button. Dewald, how are you? Happened to me, got liquidated like 3 times each for different reasons, and I learned from them. Yes, as long as you're learning, right? That's part of the game. You need to learn from the game. Absolute wonderful. 𝗖𝗿𝗆𝗽𝗁𝗽, Dewald, how are you finding and confirming the SFP levels to watch? Can you say, please? Right, and that's now based on the technical analysis that I'm going to do over here. Okay, most of the SFP levels is based on resistance confluence. It's the easiest way that I can explain it. I can see that I have some pro members here in the community as well. Okay, it's about confluence. It's about, you know, do you have a 0.618 that aligns with the point of control, that aligns with a daily level? There's a high volume node. So when you start building up confluences and levels starts gelling together, it creates a swing failure level that I'm interested in. Okay, but I will explain that now when I do the technical analysis. On 1 to 3 minute time frame, we even use less than 0.5% of portfolio. On 15 minute, I use 1%. Yes, you know, sometimes, Junior, you're absolutely right. You know, when you are entering a low probable trade, you're not really comfortable, but I mean, it's giving you the signs that it can fall or it could jump up. Okay, you don't have to trade with 1% of your capital. You can say, stuff this, I'm going in with 0.5% of my capital, or I'm even going in with 0.2% of my capital. Okay, it's about, can I win the trade? It's not about how much money you can make, because by winning every single trade, even with small amounts of capitals, adds up. It adds up, right? And then by the end of the month, you look at your portfolio like, wow, I had a profitable month. Okay, that's great. Okay, right. Let me move on over here. Okay, let me just scroll down. I see there's a lot of comments. Challenge for the community. Dewald, let's start a $100 challenge for the YouTube community. Maybe I should do that. Kadosh, I think that's a really great idea. I think what I'm going to do is I'm going to either open up a fresh weeks or Bluffin account. I'm going to put $100 in it and I'm going to trade it. Well, obviously, if I'm live and there is a trading opportunity, I will take a trade and show you guys how I take the trade. But I will take trades and you can see the history, you can see the P&L. We can track it over a week, over 3 weeks, over a month, over 3 months, and just see, okay, you know, and yeah, I think that's a really good challenge, right? I might not be able to take every single trade in front of you, because I mean, I only go live for a couple of hours a day. I'm not here in front of you the entire day, but I think that's a good challenge, right? Good idea. Thanks, Kadosh. I'm going to actually flag this comment so that I don't forget and go and create an account, slap $100 in there, and let's do it together. Right, cool legends. And I mean, talking about trading, so now this the decision is as follow, right? Is it going to be weeks or is it going to be Bluffin? Right. What I do like about weeks, I think I might open up a new fresh weeks account. Okay. What I do like about weeks is that you do get the 50% welcome bonus. And if you deposit $100 into your features account, okay, you will get another $100 to trade with for 7 days. Okay, so that's a nice little deal from weeks. And, okay, and you get the amazing sign-up bonus. And if you keep on trading on weeks, they now have this bonus. As you're trading and you increasing your trading volumes, you get these little rewards here on the side. Okay, if you trade $10,000 in trading volume, you get WXT tokens, then you get some Pepe, and you also stand a chance to win a Rolex and an app. So I think, yeah, I'm going to open up a weeks account, put a fresh $100 in there, and I'm going to start trading here with the community. So I think the nice thing about weeks is you get the sign-up bonus, plus you get rewarded by trading. Okay, by turning some volume, you get rewarded. Right. Okay, cool, legends. I'm definitely going to do that. So, Kadosh, thanks for that suggestion. Cool. Very good challenge. Love it. Yes, Thelma, I'm definitely going to do that challenge. $100 challenge. Brilliant idea. Yes, I think let's do the $100 challenge. Okay, I'm gonna have to give that account some love. It's not always easy. I just have to admit to everyone, it's not always easy trading multiple accounts, because I have often found in the past, because swing failure patterns, you have to be so sniper about them. When you have 2 or 3 exchanges that you are trading, I don't recommend it, because by the time you get to the 3rd exchange, price has already run away, and now you have to use less capital, or you've missed the trade, for example. So, but I'm going to focus on that $100, and let's see. Okay, it's not about how quickly we can grow the account. It's about keeping the account profitable, keeping the losses small, and looking at those high probable trades. So I love the idea. I love the challenge. We're going to do it. Right. Okay, cool, legends. Now, let's analyze the price here together. And now, remember what I've told you guys about the contracting diagonal, 1, 2, 3, 4, 5, or the 1, 2, 3, 4, 5 impulsive structure. So in this, we now need to find impulses. And I can tell you guys now, it does not look impulsive. Okay? Because you can count 1, 2 on the smaller. Okay, I might have to go into the 5 minutes so we can see the structures more clearly. Okay, so now, legends, we need to find an impulsive structure. So here down in the teeny weedy tiny little bottom, if you go into the 1 minute time frame, I can count 1, 2. And one could argue, okay, well, maybe there's a 3 and a 4 in here somewhere. Very confusing, a 3 and a 4 in there, because now you haven't even tapped proper Fibonacci. So it's already starting to invalidate bullish case scenarios. Okay. And then, so let's force count it. 1, 2, 3, 4, 5. Okay. So one could argue, I see a 5-wave impulsive structure for a wave 1. Okay. This is my wave 1. And then I see a 3-wave structure in a corrective structure, which is my wave 2. Okay, now I need to form a 3rd wave to the upside for an impulsive wave. Okay, it is not possible, because if you take a trend-based fib from the low to the high to the low, okay, your 3rd wave usually has a minimum target, of the 1.618, but as long as it's not the shortest wave. So ideally, you wanted your 3rd wave to shoot past the 1-to-1 extension. So just looking at the structure from here, and we failed over here, I can tell you guys now, it's not an impulsive structure. So it's something else. Not impulsive. I can count 1, 2, 3, 4, 5 over here in 1, but now I need 3. And I need 1, 2, 3, 4, 5 in 3. Then I need 4. Then I need 5. Do you guys see? I need 1, 2, 3, 4, 5. 3 failed already, so it's not an impulsive structure. Now the next question is, well, what about a contracting diagonal? Okay, the contracting diagonal is usually the trend is taken from number 2. Okay, and now you can see, well, okay, we have a trend over there, and then the top trend is taken from number 1. Now we have a problem. Houston, we have a problem. It's not contracting. It's not contracting. It's a little bit expanding over here. Okay, you do get expanding triangles, but they are very rare and never preferred unless all other scenarios have failed. Even corrective structures first needs to be considered before you look at an expanding structure, where you then form a 1, 2, 3, 4, 5. Okay, and there's a problem already. Even if this expanding structure is going to play out, there's a big problem. Your 3rd wave is the shortest. Your 3rd wave is not allowed to be shorter than 1 and 5. It's not allowed to. Okay, maybe this was even 1, 2, 3, 4, 5. Wow, this is really weird. Okay, this is you see, legends, and that's what they teach you in Elliott Wave theory. When you have to start forcing things to work, like, okay, maybe I can force it. Maybe this is a 1, 2, 3, 4, 5. Okay, but then this doesn't make sense. Okay, it's cutting through the price action. Maybe you put it here, but now you're putting it on the corrective structure target. It's forming a parallel. You see, you're starting to force the count. And what Elliott Wave theory teaches you is that if it's not contracting and it's not expanding and it doesn't look pretty, it's corrective. So this entire move can potentially be argued to say that if I cannot count a contracting structure, if I cannot count an impulsive structure, well, then maybe it is a corrective structure. Okay, so there is a low probability, because I cannot count an impulse in the structure, there's a very low probability that price, okay, is going to claim the all-time high before it takes the low. Very low probability. Okay, I don't want to throw a percentage out there, but I'm telling you guys now, very low probability for price to for this to be the low, and for price to go to $110,000. Very low probability. The corrective structure can still continue to the upside, but you have to remember it is still a corrective structure, and the probabilities are still higher that in a corrective structure, if you move to the upside correctively, okay, if you move to the upside correctively, you're still going to take the low before you take the high. Right. There is a scenario where you can even go up to $95,000. There is a scenario where you can go up to $95,000 correctively and still take the low before you take the high. Okay. Right, legends. What is most important is to look at this structure. Let's go back here onto the 15-minute time frame, and let's just make it simple over here. Okay. Let's switch on the VRVP to help us with a little bit of volume. Okay. Let's make sure that we have, let's go to the daily time frame and make sure that we have all our daily levels marked out. Now, this is where the trading starts kicking in. I don't know where price is going to go, especially if you are in a corrective structure. Corrective structures are very complex and they are very difficult to count. You can start forming, you can form double zigzags, you can form WXY corrective structures, ABCs within the WXY corrective structures. They are extremely complex, and the easiest way to trade them is what I'm about to show you. Okay, let's look for daily levels. So I go switch on my daily levels over here. Okay, let me just take out the VRVP for now. Okay, right, there we go. Now I have already some daily levels that I've included over here. Okay, we have an open and a close that has not been tapped. An open and a close not been tapped, so valid. Okay, has that one been tapped? I need to zoom in here. Okay, it looks, no, not tapped. Still valid, right? Tick, valid. I have a daily level. I have another daily level. Okay, let's zoom out ever so slightly. Tomorrow, this will be a daily level. If we don't go up here, that will form a new daily level. For now, it's still busy forming because this is today's candle. I'm not allowed to put the daily level there yet. And I have a daily level here at the bottom. Okay, cool. So it looks like I've got all the daily levels, nothing else. Okay, then what I like to do is go and look at point of controls. Let's look at point of controls. Okay. And you can see I have a lot of pointer controls already put in. And the easiest way to explain to everyone how I add fixed range volume profile is I look at every day. I look at yesterday's candle. Okay, so yes, this morning when I woke up, I did this. I snapped on my fixed range volume profile on yesterday's candle. And now you can see we have a naked point of control that has now been tapped by today's price action. Okay, so if you go here onto the 15-minute time frame, you can now see that this naked point of control that I had marked out this morning for yesterday acted as support. Now you can see how important these levels are. They work because you could have played a swing failure from this pivot. You dip below, you get acceptance back above, you're long with your stop below the low, price moves in your favor, you protect your position, and you start taking profits when you hit resistance. Okay, that's where you take profits, and look at where we rejected, at damn resistance. But you could have had now a successful trade in the bag just based on this level. Okay, another thing that I do is I also check out the weekly levels, but that I only do on Mondays, okay, because I've already marked out all of my weekly levels over here. Okay, so every Monday I go check the previous week to see if I have a new fresh weekly level, and there's a weekly level not being tapped, no other weekly levels. And then I also put in weekly point of controls like I've done with the fixed range volume profile. So last week's candle, where was the most amount of volume traded? At $86,000. These levels, the higher the time frame, the more powerful they become. Right, so now I have levels marked out. Based on these levels, I can take successful trades. Okay, so now if I go back here onto the 1 hour time frame, now this is where things become really, really interesting. Okay, purely based on these levels. I'm not even going to use Fibonacci or anything like that. I just want to show you guys how easy it is. Okay, you can be a trader that says, I'm only going to focus on the weekly levels. I don't care about daily levels and point of controls. Okay, I want to take the high probable trades because I know the higher the time frame candle, the more powerful it becomes. So you're going to wait for price to hit this level or this level. So you are going to consider a long over here and you're going to consider a short over here. If price moves up and you get that, right? Imagine that, you get that, you get that. If price moves up, it finds resistance. Remember, last week, this is where the most amount of volume was traded. So it's going to be a tough nut to crack. If price moves up here and it falls back down and it starts trading below the level, that is a short entry with your stop above the high. And now you need to go and identify your support. There's a support, and there's a support, and then there's a support. Right, so this could be TP1, TP2, TP3. And what most traders will do, and what I also do, is I am more aggressive with my TP1, a little bit less aggressive with my TP2, and I usually close my position at TP3. Most of my trades is actually only TP2s. I usually close my position at TP2. I very seldom have TP3s. Okay. This is, so when I say I'm more aggressive, is this is where I will take 60% of my profit. This is where I will take 30% of my profit. And then I'll maybe leave 10% of my position open over here. Okay. Remember, because when you hit support, price can turn against you at any moment. So if price falls back down here and it comes back up, you already have 60%. If price continues, now you have 90% profits. If price continues, now you have 100% profit from the entire move here to the downside. Right, so I have explained a swing failure strategy purely just based on weekly levels. Some people sometimes ask me to say that I don't have a lot of time to trade. Then I would say, well, only focus on weekly levels, or only focus on daily levels, or set alarms on all the levels. And when you have time and one of your alarms goes off, go pay attention. Okay, so now it becomes a little bit more interesting when I switch on all of the levels. Okay. Because now this is where day trading starts kicking in. If you've got a lot of time to sit in front of the charts and you can take multiple trades, at least 1 or 2 trades maybe a day, okay, this is now what you're going to look at. You're going to have a colorful chart with nice, beautiful orange, yellow, green lines like this. And all you can do, okay, did you guys see I haven't used Elliott Wave theory. I have not used even a Fibonacci. I haven't. You do have to be able to successfully identify support and resistances. If you cannot identify support and resistances, you will never know where to take profits. So that's the one skill that you have to teach yourself. Go and research it, go and watch tutorials, okay? Ask people, join a community, come join our Legends Pro community, the free section, you know, help each other to identify proper support and resistances, because if you can identify proper support and resistances, okay, to the up and to the downside, right? There's another one. If you can successfully identify these areas when you are playing longs, okay, you know where to take profits. TP1, TP2, TP3, okay? These lines can also act as resistance and support lines, but it's even more powerful when you have your manual support and resistances lined up that aligns with those areas of confluence. Okay. So, Legends, this is where it now becomes really, really interesting, okay, is that, okay, we got now a successful swing failure pattern from a naked point of control, and we have hit resistance. So there was already now a successful trade in the bag. If price continues to move here to the upside, well, you can always, you know, okay, I don't want to overcomplicate it. You wait for this level for potential short. If you get a successful short, okay, remember now you're going to start hitting support again to the downside. You need to take profits at support, TP1, right? TP2 and so forth. If price breaks your level and it finds support above your level, remember what I always say, as long as price is above your area of interest, no trade. Nada. You do not enter the trade. Okay. And now you can see, guys, how many levels I have. These levels present opportunities. I can have an alarm at every single level, and when my alarm goes off, I can come and switch on my computer and see, okay, we're getting the acceptance, we're not getting the acceptance. Am I going to enter the trade? Am I not going to enter? Am I too late? Have I missed it? Okay, I've missed it. I'm going to wait for the next level. Okay, or right, I'm there, I'm in, I've protected my position, and I know where to take profits. That's basically, dare I say, that's how simple it is. Dare I say, that's how simple it is. Okay. And you guys can see this is a trading strategy just based on weekly, daily, and point of controls. And you can even simplify it and say, well, I don't want point of controls. I only want to trade the weekly and the daily levels. Or you could say, right, I don't want weekly and daily levels. I only want to trade the point of controls. Okay, it depends on how much time you have, your strategy, and go and back test it. Reverse the price of Bitcoin, go put in the levels like I've just shown you, and go and practice the trades. Okay, or if you don't want to go and back test it, I recommend that you trade with $5. Okay, trade with $1 to $5. Play on 2x leverage, keep the leverage low, just try and win the trades, build up your confidence and see, okay, because you have to play a couple of swing failure, and when I say couple, you have to enter at least 100 swing failure patterns before you'll get the hang of it. Like, okay, I can see now how these swing failure patterns work. Stick to one asset, like Bitcoin. Don't go and try it on Link today. Tomorrow you are on Ethereum, then you are on Solana, then you go and try it on Pepe, then you back on Bitcoin. It's not going to work. You're going to be unsuccessful. You're going to struggle. You need to learn the personality of Bitcoin or the token that you prefer to trade. Okay, I can tell you guys now that the weekly, daily, and naked point of controls works best on Bitcoin. The more mature the market, the better those levels gets respected. Okay, so if you want to play swing failure patterns, I have not found an altcoin that respects those levels the way that Bitcoin does. Okay, you need to learn the personality of the coin. You have to build a relationship with it. Okay, it's you will have a higher success rate in becoming a profitable trader if you stick to one asset. Choose that asset and stick to it. Learn that asset's personality. Okay. When you've mastered that one asset, maybe you can say, okay, I'm going to extend it to platinum or gold, or whatever the case might be. Include then 2 instruments that you are trading. Okay. But don't try and jump from token to token to token, or you have 100 trades open. Okay. You have 100 altcoin trades open. How do you manage those trades? I don't know how people manage 100 trades. Okay, I don't know. Even very experienced traders, they cannot manage 100 trades. Right. Okay. Cool, legends. So now we have levels to the upside and to the downside. And now I can make it a little bit more complex. But I think before I continue here, I might have sparked a couple of questions. So let me go through some questions. Right. Let's see. Look what I started. Can you share your news observation, like on CPI price tends to reverse and many more? Right. Yes, 𝗬𝗍, it's, you know, I'm not a fundamental trader. I do not trade the news. I did not take the short because I made popcorn and I watched the price action. I do not like to trade news events. It's almost like they are made to stop you out. So I saw the short, but I didn't take it. I knew I had to take it, but I didn't take it. Should I have taken it? Yes, I should have taken it. I just don't like to trade the news. I don't like to do something that puts my money at risk. And that basically tells me that I would rather wait for the market to absorb the news, for the market to calm down, and then start trading again. So in terms of my view of my observation of CPI price tends to reverse price and many more, yes, I have seen many times bullish CPI data comes out, price has an initial pump, and then it drops to the bottom. And then I have seen bearish CPI news, price, you know, it falls briefly to the bottom and then it recovers back to the upside. So I don't know if there's correlation to it. I don't trade news. So I actually don't care, right? I just trade the technicals like I've just explained. Very often, I will see, for example, a shorting opportunity where I'm like, this has to be the zone where it falls down. And do you guys remember I did a live stream one Friday, on a beautiful Friday, okay, the 21st of Feb, I did a live stream over here. And I said, guys, if it needs to fall, it needs to fall right now. And I was zoomed in here onto the 5-minute time frame, and I said, this is where I would short, okay? I knew that this was a reversal point, okay? And I knew that that was an epic shorting opportunity, and I was looking for a short in that zone. I was in the live stream, and I told everyone, this is where I would short right now. Short right now. This is where you put your stop loss. And only after this happened did the news come out. That's why I don't trade news, because news in my mind is a lagging indicator. The technicals tells me that something big is about to happen to the downside, and then the news is the reason why it happened after the fact. Okay, so I'm not a fundamental trader at all. I do not trade news. I do know that there are some institutions that believe in trading fundamentals. I think those are long-term investment portfolios, right? Maybe that's insider information. They know that this company is going to launch a product that's going to get everyone excited in anticipation of that product. So it's basically buy the rumor, sell the news. You know, that's basically trading fundamentals. I don't like fundamentals. I like technical analysis. So yes, my observation is, from what I've seen from a CPI perspective, is it does the opposite. We get bullish CPI data, we fall down. We get bearish CPI data, we go up. It's crazy, right? It's absolutely crazy. If you want to trade that, by all means, I rather try to stick to the technicals. But in hindsight, we knew from yesterday's live stream that this is a shorting area. Technically, we knew that this is a shorting area regardless of the news. Okay. We can also do the challenge with you if you start a Discord for the challenge and share. Right. I think I will definitely share. I do currently share my daily technical analysis inside the Legends Pro community. And right, I'm not sure if I will be able to have time to share it with everyone, every single trade. The problem with some of the swing failure trades, and this is why I like to educate This happened so quickly. By the time I would have posted it, price was already here. Then what happens is, oh, Dewald is in a short. They FOMO into the short with a stop loss above the high. Okay, people FOMO into trades because they happen so quick, and you have to be so fast with the fingers when you type. Like, guys, I've just entered over here and then price has already run away, for example. Right? And this is why I rather want to teach you and show you areas of interest where you need to pay attention so that you can pull the trigger as quickly as you possibly can and protect your cash. Okay. Right. For me, it's more important to teach you to catch fish by yourself than give you fish for a day or a week or however long we run this $100 challenge, and then you only eat for a day, right? If I teach you to catch fish, you can eat forever. Good evening, man. Do you think that in the largest time frame, this part of a big correction, I mean, we could make a last low before building momentum to the upside? Yes, Alicio, this is a scenario that I am still keeping an eye on. This little bad boy over here. Okay, remember what I've said about contracting diagonals? Okay, this scenario is still in place or in play. This scenario is still in play. And this is why I'm saying, legends, this little structure, okay, pay attention. This little structure, I just showed everyone, I cannot count an impulse to the upside. I'm struggling. It looks like it's a corrective structure to the upside. And if we are going to make number 4 over here, guess what? Number 4 is a corrective structure because you have an impulse in 1, you have a 3-wave corrective structure in 2, you now have an impulse in 3, and now you have a complex corrective structure in 4 that doesn't make any sense. Okay, a lot of people struggling to count the structure, and then you make another impulsive structure in number 5 where we claim the low before we move up. So yes, Alicio, here's a scenario. Here is a scenario where we could still come and claim the low before we move up, and this looks to me very corrective, which gives me a clue that this could be a 4th wave that's forming over here. Okay, so the question is, Dewald, can we still go up from where we are right now? And the answer is yes, but I think we are going to move up correctively. Like we did over here, we moved up correctively in a 3-wave structure. This could be a very complex WXY triple zigzag structure that goes like this, and then eventually it completes the 4th wave, and then, you know, it moves down to go and complete the 5th wave to the downside, right? It can get very complex. Right, cool. So yes, here is a scenario, but there's another scenario as well. I will go through all the scenarios, the bullish, the day. Tomorrow I want to go again through the weekly time frame, the daily time frame. I want to show everyone the scenarios, which scenario carries the highest probability, the lowest probability, and also share with you which scenario I think carries the highest probability. Some people will be shocked with my answer. Okay, so tomorrow we'll spend a little bit of time on that. Right, cool. Let's go on over here. A lot of comments streaming in over here. Good news go down, bad news go down. No news go down. Right? Yes. I mean, if the momentum is to the downside or to the upside, right? I've even seen, you know, when we were forming these bullish structures here to the upside. Okay. I saw a lot of bad news as well. There was some good news that sparks the catalyst, that sparks the momentum here to the upside. But during this move here to the upside, there was a lot of bad news as well. And then people are like, the price is so bullish, the market just doesn't care. Well, now with this momentum here to the downside, there's also been some bullish news. And now everyone is like, the top is in, we're in a bear market. No bullish news is going to send the price up, right? It's I just don't like news, legends. News for me means nothing. Okay, for me personally, and I'm not saying it doesn't work. I'm just saying for me. Right, Hugo, love your education, Dewald. I'm still learning and comfy in spot, but hope to start day trading end at end of 2025. So much to learn still, especially mindset. You go, absolute boss, man. I mean, right, the safest way to invest at the end of the day is DCA, holding those spot bags, adding a little bit every month, buying your favorite Bitcoin, Ethereum, maybe some of your altcoins that you like, just DCA, because DCA at the end of the day is the safest strategy long term. Okay, not short term. If you are DCAing spot bags into meme coins that just got recently launched, then you're not a smart investor, right? You need to do some fundamental research as well. Bitcoin at the end of the day is the king of the crypto, and it's at the end of the day the best token to invest in the crypto space. Okay, will it give you the biggest gains? Maybe not, okay, but it will definitely hold the strongest when times gets bad. Right, so you go. Good luck with your learning, and I hope you stick here with the channel, absorb as much information as you can. Right, Dewald, explain that new analysis for retracement you discovered a few weeks back. Retracement, let me think. Okay, I'm most probably going to click after the live stream. I know that sometimes there's people that ask me questions, and then when I enter live stream, I'm like, oh, that's what they meant. That's what they meant. Okay, Dewald, explain that new analysis for retracement you discovered a few weeks back. I'm going to have to think about that one, Ahmed. I'm not sure if you know the live stream in which I discussed it. Okay, Legends, no spam chat is for everyone. Right, yes, the mod is in the house, right? Cool, Legends. Now, I just want to take a quick sip of water. Let me give you guys some music. Right. Cool, Legends. I mean, if you guys would like to come and join me on trading, link is down in the description for the 2 exchanges that I use from a day trading perspective. You select more, you open up the description at the bottom. I've got weeks with that 50% cash back if you sign up. If you are already signed up and you trade on weeks, they have this amazing deal. Basically, they reward you for trading on weeks. Okay, the more you trade, the more prizes they will give you. You even stand a chance to win a Rolex, an Apple, MacBook Pro. And right, so Legends, it's nice to sign up to an exchange to get the reward or the sign up bonus. But for me, it's even better to trade inside of an exchange where I get rewarded for trading volume as well. So I know many of you have already signed up to weeks. So now, you know, if you keep on trading on weeks, they will reward you. Right, the higher the volume, you get WXT tokens. Sometimes you get chances to spin a wheel, right? They really shower you with benefits. And all you need is an email and a password. I also have Bluffin. If you don't like weeks, I also have Bluffin over here. All you need is an email and a password, right? Also, the more you trade, the more money gets airdropped into your account. It's nice little bonuses, okay? Sometimes you don't expect it, you know? Maybe you have $1,000 account, the next morning you wake up and you have $1,200. You're like, did I place a trade while I was sleeping? No, they reward you for trading on the exchange. Okay, and if you'd like to come and join our Legends Pro community I think this site is being maintained at the moment. But if you'd like to come and join our Legends Pro community, this is where it happens, right? Link down in the description. Okay, cool, Legends. Yeah, that scenario I want to talk about tomorrow. I think what's important now, Legends, is just to, I think for me to leave you guys with a couple of nuggets in terms of what I will be looking for from a longing and shorting perspective is just to build a couple of areas of confluence. Okay, so one tool that I used to use a lot and then I stopped using it is this VRVP tool. Okay, you can find it under indicators. What I like about this tool is it gives you the places where the highest amount of volume was traded. Okay, nice little volume nodes that will help you find support and resistances. Because often what I have seen is that, you know, when you start drawing boxes, you take a box over here and you draw it and you just draw it. You can see, ooh, actually, that is resistance. You have an order block over there. Okay, you have resistance. You tried to flip it into support. You lost it. Resistance, resistance. You have a resistance box. Okay, so this is a simple way to get yourself started in identifying proper support and resistance. Here is another one. Okay, right? I'm simply just using the tool over here to identify support and resistance. So all the boxes here to the upside is resistance. So they should all be red, but I'm just drawing the boxes so to show everyone, right? There was a small little one where we got the rejection now from at the moment. Okay, I'm just going to draw all of them out and then I'm going to show you guys how powerful these boxes are. Right, but you know, after a while you get so used to them that you don't even need the VRVP anymore. You just see it based on price action. Okay, and well, we have to, that is, there's one, okay, the VRVP is not showing it, but I can see it from this pivot over there. There's another support box to the bottom. Okay, now that I have my support and resistances drawn out, I can switch off the tool. Okay. I now have areas of resistance above and I have areas of support here at the bottom. Okay, very powerful to have. Then, you know, you can go and take it a step further and say, well, I'm going to take a Fibonacci from the top. Okay, keep it simple, from the top to the bottom. And when you start having, or when you start seeing Fibonacci levels aligning with some of these boxes, okay, you can see, yes, with this box, I have the golden pocket, the 0.618. Okay, this is an important zone for me. Yeah, by the 786, not much, right? It's like in the middle between nowhere. So out of this entire zone, this is the most important zone that I can see over here. And also when you switch on your VRVP, you have your point of control. Okay, I think it can like to jump around. Okay, there we go. It jumps around depending on how much price action you bring into the screen. But you can see this is the point of control. Inside of this entire range, this is where the most amount of volume was traded. So this is a very interesting shorting zone or a longing zone. It's either going to fail miserably and come back to support, or it's going to smash through like a hot knife through butter and find support above. Then that becomes a longing opportunity because now you've done an RS flip and then you continue momentum to the upside. So yeah, that's just something that I quickly wanted to point out, legends, is that, you know, that's the easiest way to identify support and resistances. Okay. Right. I want to switch off the VRVP. I also want to go and switch on my point of controls, and I want to switch on my daily levels and my weekly levels. Okay. Oh, and we have a weekly point of control there as well. So you guys can see how significant that level is. Right. I'm just going to, I want to move this one up a little bit higher because I like the top of these boxes. This one should also move up ever so slightly. Okay, I will explain why I'm doing this tomorrow. Why am I moving these boxes up? And you might be saying I'm aligning them with the Fibonacci levels, but I'm actually aligning them with these little pivots. I'm aligning them with these little pivots over here. Okay, and this box should also move up. Right, this one I'm going to take out, and then this one I'm going to take out. We have daily levels there. Okay, cool. So now, legends, I'm going to take these two out just to clean up the chart. And from a confluence perspective, the most interesting levels on the chart from a shorting and a longing perspective. The one we've already tapped, it was the naked point of control. We got the swing failure pattern from the highs. That was the short. We fell back down. We hit resistance, naked point of control, or support, and we found now we're getting momentum back to the upside. The only short that I will consider is over here. We've already claimed the liquidity above this high. So if price continues to the upside, this is where I will consider a short. You have a high consolidation area, you have a weekly point of control, you have the 1.618. So someone asked earlier on, how do you identify a swing failure area? This is how you identify it. Okay, consolidation areas provides nice little resistance if they are to the upside. You have a weekly point of control, you have a 0.618. So this is where the planets are aligning. This is where I will consider a short if I see the price action that I like. To the downside, the only long that I will consider is at $78,567. Okay. And then if we do not, so let's say price makes a lower high, it rolls back down. Okay. If you tap this level for a second time, it becomes much weaker. So in actual fact, you can delete it. It's already served its purpose. Okay. If price now comes to the downside, this is where I will look for a long. Only if price trades above my area of interest, this is where I enter, this is where I put my stop loss. Okay, and now you can even be cheeky and put your FIB here from the bottom to the top, and you can see, ooh, nice. It also has a 786 level over here. So maybe it comes back down, claims the 786, it starts trading above. I'm interested in a long. When you start hitting resistance, that is where you need to take profits. Okay, TP1. Right, because you can roll over, you can form lower highs. But I'm looking to take advantage of that long, because this is how you day trade. You long, you short, you long, you short, you long, you short. Okay, so this is where I want to long, and then you could form that lower high. Maybe there will be a FIB pull from the low, from the high to the low, 0.618, and then this weekly point of control at $75,000, 893 is where I will consider another long. This could be a day trade that turns into a swing trade, because if you hit this zone, there's a lot of support over here, and if you do get successful price reaction over here, you need to take profits at resistance above. But this could be where it forms a local low and you get a significant move to the upside. Okay, so when you start, I'm not sure how to explain it, legends, but when you hit critical levels from a macro perspective here to the downside, these are the type of trades where you do take profits when you hit resistance, but I take less profits. So I will, for example, take 30% profits over here, knowing that I have now caught a potential longer trade to the upside. Okay. Anyways, I don't want to get too technical. I'm trying to keep it simple, okay? But you guys will get the hang of it as we continue over the weeks, months, and years, right? Hopefully by then, most of you should have gotten it already, right? Okay, cool, legends. So for me, in a nutshell, shorting opportunity, longing opportunity, longing opportunity. Where price is at the moment, you have missed the long. You've missed it. I do not FOMO into a long when price is in the middle of nowhere. You should either already be in a trade or you are waiting for price to come to your area of interest. This is my area of interest. This is my area of interest. This is my area of interest. If price is not at my area of interest, I don't care. I do something else. I go wash dishes, I make food, I go to the gym until one of my alarms go off. Okay. Right. Cool. Let me go through some more comments. Hi, Dewald. If we want the fourth wave, we need to not overcome the 50%. Yes, the 618 is the invalidation. Okay, so I know which scenario you're talking about. Okay, now we're going very technical, guys, right? Because I often speak about Elliott Wave scenarios. Okay, a lot of people love it. Okay, and sometimes when I stop talking about Elliott Wave theory, people actually get upset with me and they send me messages, why you didn't go through Elliott Wave scenarios, right? So some of you might still be looking at this structure as a 1, 2, 3, 4. Okay, we're still looking for another low, right? Just to keep it simple. So the rule, like you've just asked, RVM3, like you've just asked, you take a fib from number 2 to number 3, and you are not allowed to tap the 0.618. So there's a chance that price could fall down here, okay? And then I'm looking for that weekly point of control. But do you guys see? But then you have completed an impulse to the downside. So by catching this low, when you've counted this structure at a 5 wave, could be an epic reversal back to the upside to even come and claim these highs. This is where I will take majority of my profits. Most probably 80 to 90% of my profits. I don't care if it moves higher. Okay, this is a significant move if you can nail this entry with good risk management. Okay. And yes, I know that we have identified the 0.618 as a high rejection zone. So, you know, it's basically if you reject here, the rule is you take profits when you hit support. And now you have increased the probabilities that you're going to make a higher low and most probably continue momentum to the upside without taking the lows. Right, because then the 5th wave is invalidated. Cool. Let's go. With the VRVP, you need to go on weekly and snap the indicator from the... Oh, you guys are helping each other out. Yes, definitely. That's how you do it. I'm struggling with my weekly point of control. They are very, very different on my chart. Do you have yours? Okay, let me do this. Here is my session volume profile. Okay. It's not VRVP, it's session volume profile, what that I use on the weekly time frame to do my weekly point of control. My settings are as follow. You can take a screenshot of that if you want to use it. Okay. Those are my settings, and these are my style settings. Right, you can just make yours the same. Okay, and then also your levels might differ if you are not trading or analyzing the same pair, Bitcoin pair that I'm analyzing over here. So if you're using weeks, Bitcoin weeks or Bitcoin Bitstamp or Bitcoin KuCoin, okay, I am using Bitcoin.p Binance Perpetual. Okay, that is the one that I use, USDT, because it is currently the Bitcoin pair on TradingView that has the most amount of volume, and that's why I like it. Okay, more volume, the better the analysis. Okay, right. Cool, thanks. Can C in ABC correction go to FIP level 2? Yes. But it's very rare. I have seen it. In the last year, I have seen it happen three times or twice. That's how rare it is. Okay, if I go here on the 8-hour time frame, I want to see if I remember that scenario. It was here somewhere where I saw it. Was it this one? Was it this one? Okay, if you go onto the smaller time frames, you'll actually see it a lot better. But there was an A, B, C that tapped the 2.618. This was a C wave. This is where I saw it. So this is more than a year ago where I saw this one. So that's how rare they are, but it does happen. Okay, so out of 10 times, or maybe out of 20 times, you will see it happen once. That's how rare they are, but it does happen. Very rare target, but it does happen. That was a C wave. Okay. Smash that like for the education. For me, I usually go from Monday forward to next Monday. That's why we just use your time accordingly. Okay, right. Cool, legends. What else? What else? Okay, I'm sure no one wants to look at altcoins. Something else I want to discuss tomorrow. Do I have it open? Dewald, can you count Elliott Wave as price making higher, lower high? Wait, let me just change the comment over here. Dewald, can you count Elliott Wave as price making lower high? I'm not sure what you mean by your question. I'm not sure what you mean by your question, okay? Because when you have, excuse me, when you have a 5-wave structure, okay, you have to remember, okay, you now already have a higher high, a higher high, a higher high, higher low, and it also works in reverse. Lower low, lower high, lower low. Inside of each structure, you have 1, 2, 3, 4, 5. So inside of that mini structure, you have higher high, higher high, higher low, higher low. And then inside of this structure, you also, I'm not sure if that answers your question. Okay, but I think this is also very interesting to a lot of people. Okay, that's how it's supposed to look. And then you have ABC, you have A, B, C. And then once you've made the 5th wave, this is now where it becomes interesting. Once you've made this little bad boy over here, then you get this. Okay, and then you have a completed wave. You have a 5-wave structure with a 3-wave corrective structure. You have a 5-wave structure with a 3-wave. 5-wave, 3-wave, 5-wave. Now you have 1, 2, 3, 4, 5. And once you make the last 5-wave, you get a corrective structure that corrects the entire impulse. Because these corrections is for this impulse. This correction is for this impulse. This correction is for the entire impulse. Okay, I hope that has answered your question in some way. Right. I'm talking about right price movement in 5-minute time frame. Where can I like to be? Right, let's go back here onto the price action. Let's go into the 5-minute time frame. Let's see what is cooking over here. Okay, now the question is this an impulsive structure? Okay. Currently, the structure is making higher highs. Okay, and you could argue that you have higher lows. Remember, when you see a bottom, you need to start counting impulsive structures to the upside. Okay, so, I mean, the structure is still very fresh. Okay, the structure is very young. This could be a 1, 2. It can't be a 1, 2, 3, 4. Okay, unless it's there's already an expanding. Doesn't look impulsive. Okay, the structure is still very, very fresh. Okay, let's go on to the 1-minute time frame. I don't particularly enjoy the 1-minute time frame, but one could then argue to say that, you know, you have a 1, 2, 3, 4, 5. You have a potential A, B, C. Okay, let me just make this small. Right. Now you have, it's not an impulse, okay, because this now needs to become, legends, I can spend hours and hours on Elliott Wave theory. You need a 3. This is too short for 3. What is this? This is a corrective structure. Okay, you cannot have a 1, 2, 3, 4. You cannot have this. Okay, your 3rd wave is also incredibly short, and even when I take a trend-based fib from the low of 1 to the top of 5 to the low of C, your 3rd wave is shorter than your 1st wave. which is not an invalidation, but now what is this? It came into the territory of your first wave. It's not allowed in an impulse unless it's a contracting diagonal that is forming over here. And even from a contracting perspective, it looks very wonky, okay? Because now you need to take your trend from the top of one, you need to connect it, and you need to take this trend from the bottom. Now you have an expanding triangle. Very rare, never preferred unless all other scenarios fail, where you now build a 1, 2, 3, 4, 5. You go down for an ABC and you continue momentum to the upside. This structure is very rare. Okay, expandings. You rather want to see a contracting diagonal with 1, 2, 3, 4, 5. It's just, it's not a pretty, it really looks like a corrective structure here to the upside. Okay, but I mean, regardless of whether this is an impulse or not an impulse from an Elliott Wave perspective, we know where the resistance and the areas of support is. Okay, I mean, you can just see from the smaller time frame over here. Look at this. Okay, look at this. Beautiful resistance. You're now at resistance. Okay, so without going into Elliott Wave theory, what you want to see is price needs to break out. Okay, and flip it into support for continuation. It's struggling at the moment. It struggled here. It was support over here. It lost it. Resistance, resistance, resistance. Broke out. Resistance fell down. Resistance. Now it's at resistance. So one could argue this is actually a better shorting opportunity than a longing opportunity. Okay. Right. Thanks, Dewald. Those weekly point of contact different by quite a few thousand on Bybit, for example. Oh yes, Simon, I know. I'm not. I don't use Bybit to do my technical analysis. I prefer to stick to one chart, but I do know that they do sometimes differ. And for me, it's just way too much work to go and analyze 2 Bitcoin charts to make sure that I just trade the one in front of me. It has, I can tell you guys now, it has happened a couple of times, for example, where I will catch a short. I think it was in this range here on top. Okay. I could be wrong, legends. I could be wrong, but it was one of these pivots here on top. Right? I can't remember which one. Was it this one? Can't remember the exact pivot, but anyways, what I'm trying to highlight is sometimes I will have a level. It gets hit and I take the short. Bam, to the downside. Andy misses it because he uses the Bybit chart. And then sometimes Andy catches a short or a long. I miss it because it was on his chart hit and not on my chart. But when you balance it out, sometimes he catches the trade, sometimes I catches the trade. We both catch the same amount of trades. I'm just not, okay, I don't want to analyze 2 Bitcoin charts. It's too much work. I already spent so much time here on this chart analyzing it. Okay, it's just going to be a monstrosity of work to try and analyze and put in hours and hours of analysis in 2 charts. Okay. By all means, you can go and put in your weekly and your daily levels and your naked point of controls on both charts and set alarms and maybe, okay, make a trading decision based on that. Definitely a possibility. Right. Is there a bullish CVD in a daily candle? A bullish CVD? Are you talking about this RSI? I think I spoke about this yesterday as well. Yes, this is what I spoke about yesterday. Okay. I did see this on social media, a lot of people talking about it. I do not trade higher time frame CVD. Okay, there is hidden bullish CVD, or what they refer to as hidden bullish divergence between these 2 pivots. Okay, the target is the high. That's how you play the strategy. I do not like them on the larger time frames. They are very unreliable on the larger time frames. They become more powerful on smaller time frames, like CVD that I usually show over here. Okay, you have insane. Look at this. If I go here onto the daily, I don't even look at the daily. I don't think I've ever looked at the daily. Okay, you have insane bullish CVD on the daily time frame. Look at this. It's just falling down. It's just falling like a rocket to the downside that's run out of gas. Okay? And if and this bullish CVD even started forming while we were trading sideways over here. Right? So you could have been DCAing, and until what point are you going to stop DCAing? And because on the daily time frame, CVD indicators, hidden bullish divergence, bearish divergence, bullish CVD becomes extremely unreliable. They become more powerful the smaller the time frame. Smaller time frame, bearish and bullish CVDs always override bigger time frame bullish and bearish CVDs. It is way more interesting to see what's happening here on the smaller time frames, because that shows me in real time what retail is doing and what the market makers are doing. Okay, this is way more powerful here on the smaller time frames. Okay, so I know that I did see that some people spoke about it. Can it play out? Yes, it can play out, right? Definitely. I prefer to take my longing and shorting opportunities inside of this range, because it could still do this, and then, you know, it does this, makes another low, and now we have more bullish CVD. How often have you seen that? I've seen it often. Now you have 3 pivots, and you have 3 pivots over here. Okay, and it's usually when you have 3 pivots that it becomes more probable. Right. Cool, legends. You make sense. Interesting what you said about the most volume traded on USDT perpetuals and nons. Yes. Thanks, Mr. Simon. Yes, definitely. Okay. I prefer to trade a chart that has the highest amount of volume. I will often, maybe once every 2-3 months, I will go into CoinGecko and CoinMarketCap, and I will go look at all the exchanges and where the most amount of volume is traded. I always just make sure that I am using an exchange to do my analysis that has a lot of volume traded. The more volume inside of a chart, the more mature it is, the more it respects the levels, and the more accurate the candles. If you, for example, go and analyze 𝗬𝗚𝗃𝗍𝗃, okay, or some stupid exchange that's recently started up, you will often find scam wicks and things to the up and to the downside that skews your analysis. Okay, volume is also not the same, right? So you want to use something that has significant volume. Right, cool, legends. Remember to smash up that like button. If you're not already subscribed and you do enjoy the education that I provide over here, I did see that someone left a thumbs down on my YouTube video today. Maybe I've pissed someone off beyond measure. I'm not sure. It's the first time since I started the YouTube channel that someone has disliked the video, right? I've obviously said something to create some anger and dislike, right? But at the end of the day, I can only be me. I can only be truthful to me and what I want to educate everyone over here. I want you to be successful in trading. I'm giving you the tools that I've learned over the years, and hopefully I'm short tracking that learning experience for you guys, okay? If it takes an average trader 4 years to start turning profitable, maybe by me educating and helping you guys out here, it will take you 6 months or a year to start becoming profitable. Okay, that is my aspiration. That is my dream. I do know that I can sometimes come across as harsh, okay, but you guys must also realize that I do get a lot of slack behind the scenes of people that liquidate their accounts. It frustrates me when I get message after message after message of people saying, oh shit, Dewald, I've just liquidated my account. I'm out, right? It frustrates me, and then, you know, I hammer on risk management here on the channel often, okay, but I know most of you are legends. You get it, right? Cool, legends. You have yourselves an amazing evening, morning, and afternoon from wherever you are from around the world. I will see you guys again tomorrow. I'll do a morning update, a quick morning update in terms of the levels that I'm watching, and then tomorrow night I'm going to do some exciting high time frame, low time frame, Elliott Wave. We're going to look at Doge. Doge, guys, Doge. There's something very interesting on Doge that I would like to share with you. So make sure that you tune in for tomorrow night's live stream. Until the next one, legends, just for now.